Good morning, happy Friday. This is Steve Fried in Chicago with the morning grain comments. Markets right now, beans up 5 cents, while the maize up 9 cents. There were no bean deliveries. Meal's a little bit higher, and there was no meal deliveries, but there was some soybean oil deliveries. Corn down 3 cents in the July, 2 cents in the December, but unchanged in the May. There were no corn deliveries. Over in the wheat's unchanged. KC's up a penny, while Minneapolis is up 4 cents. There were some Chicago wheat deliveries. As far as the outside markets are concerned, stocks are a little bit lower after yesterday's big gains. Dollar's higher. Crude's been jumping around between 73.80 and 75.31. Gold, silver, coffee, cocoa, and sugar are all a little bit lower. In the grains, yesterday's export sales data was disappointing. Continue to see China buying beans from Brazil at lower U.S. prices. We're still talking about lower China, Argentina crush data because of drop in meal demand, and vegetable oil prices in Asia continued to drop, mostly because of increased potential export supplies of palm oil out of Indonesia, and just kind of wondering about demand for Asian vegetable oil. Here in the United States, the biofuel and renewable fuel data suggested higher production, and the domestic market in beans continues to be relatively firm as crushers try to buy beans at positive nearby cash crush margins and new crop positive crush margins. Again, some people feel that the U.S. export number for beans might be too high because of the competition from Brazil. Over in the corn market continues to see liquidation of the longs. Managed funds are now net short corn futures, somewhat seasonal if there's no weather problem, and the tendency for U.S. corn exports to drop relative to increased competition from Brazil. Right now, the U.S. corn export commitment is running about 200 million bushel pace behind the USDA's export forecast, which suggests a little bit higher carryout. It should be drier and cool in the Midwest to allow corn planting, but starting, let's say, late next week into the following week, temperatures should start moving higher. The wheat market, again, it's interesting that soft red winter wheat U.S. spot prices are now cheaper than Russia. Russia has established a floor for exports at $275 a ton, and soft wheat is now trading below that. I'm not sure if we see any export demand because of that, but it does maybe offer some support to a wheat market in which the funds have added to net short position close to a record short position, and the market continues to be oversold. Minneapolis wheat trying to recover a little bit from the Canadian numbers that showed higher exports and acres than expected, but it continues to be cool up there. And we are noting that as the snow melt up there melts, we see that the USDA announced that the upper Mississippi River could be closed for several weeks because of the flooding. So again, demand is in question, offering resistance to the marketplace, and we'll start watching U.S. weather for the 2023 season.